Certainly, I think the slowing of the China's economy is of great concern. But having said that, I think CIE remains one of the key platforms for our businesses looking to expand their operations in China, especially not just in the food and agriculture, but even in high-tech growth areas such as financial and trade consulting, digital innovation and sustainable development, and even in recent years in biotech. And precisely because of the economic uncertainties today, I think platforms such as CIE becomes even more important. It reaffirms China's commitment to open up and participate in the global economy, and also of Singapore's commitment to work with China to strengthen our bilateral trades and our two-way economy. But having said that, any of this reaffirmation can only be respect by real business activities. So we're quite pleased that despite the slowdown in the Chinese economy, there continues to be a healthy interest among Singapore business in China. In fact, I'm in Shanghai, bringing about 44 Singapore companies to participate in CIE. 70% are repeat exhibitors, while about 30% are new.
Kok Ping Soon, you mentioned a while ago fintech, financial services tech. Is the trade towards China, the demand of trade towards China evolving perhaps from more commodity goods towards that of being more service-based? Is that a trend that's actually happening right now with regards to a trade coming from China or trade demand coming from China vis-a-vis ASEAN?
Indeed, I think at least from a Singapore point of view, because the strength of our companies are in the services, we do see an increased interest in the financial services as well as participating in many of the digital economy projects in China. Also in biotech, for example, I'll just quote you one company. We have a startup company in Singapore, a biotech company, that's developed a blood-based stomach cancer early screening solution. And guess what? China is a big market. There's estimated about 600 million people who are eligible for stomach cancer screening. So you're starting to see some of these new services, companies with interest in China, beyond the traditional trading in goods, trading in trade, trading in food and beverages.
Mr. Kok, the other thing to note when we look at ASEAN-China trade is that while China has become the most important trading partner for not just Singapore, most of the major ASEAN economies, there is concern now about Chinese imports perhaps drowning out certain businesses. In fact, the likes of Indonesia and Thailand have already talked about possible tariffs on Chinese goods coming through platforms like Temu, for instance. Is there a concern that perhaps protectionism or tariffication of Chinese goods might pose a headwind towards improving these trade relations between ASEAN and China, for instance? What are your thoughts, sir?
I think we have to watch that development quite closely, but I think we are heartened that, for example, the conclusion of the substantive negotiations on the upgraded ASEAN-China FTA recently is a good development. And beyond trade in goods and services, it will cover areas such as the digital economy, the green economy, supply chain connectivity, and consumer protection, among others. So we are hopeful that with the substantive conclusion of the ASEAN-China Free Trade Agreement, we will see improvement in trade relations. And it's important to point out, as your earlier chart shows, China is ASEAN's largest trading partner and the second largest source of FDI.